The number of wildfires seems to be increasing as people move closer to the wildland-urban interface. In this exclusive interview, newly appointed Farmers Group Inc. CEO Robert Woudstra talks about the steps insurers have taken to help clients mitigate their risks.
You know, when you think about underwriting and how can you advise customers, right? And what can they do to help lower the chances that their house might be consumed, for instance, in a wildfire? And it's got a lot to do with the brush and the materials, right? The growth materials around the homes. And so we try to tell people ahead of time, right, to keep those areas cleared around their homes, to kind of set up a perimeter, if you will, around the home that might hold some of those fires back. Also, in our programs now, we also have retardant spray chemicals where we have the opportunity to bring out trucks with the spray retardant material to give us a chance to potentially spray the homes to kind of keep that damage down. But I think it is always a matter of any organization to be financially responsible. Also has to understand you can't just go out there and insure every home. You have a financial responsibility to look at the accumulation of risk you have in areas and not take on more risk than what you can financially handle. And if you move through 2008, the catastrophe, whether it was been hurricanes, wildfires, tornadoes, hailstorms, has been a very, very tough year in that sense. But I think it gives us an opportunity to show customers, okay, and people who might be future customers as to how we really react as an organization to their needs. And I find it interesting, some 35 years ago when I first came into the insurance business, and when people were talking about hurricanes, and they said, well, don't worry, we're 1,500 feet off the coast. We don't insure any homes within 1,500 feet of the water. And not knowing much about the insurance business then, I thought, wow, that's good. But now as these events have happened, right, and over the past 35 years, 1,500 feet from the water is nothing, right? So it's a matter of, again, you have to look, and we have, all insurance companies have, you know, levels of sophisticated models that tell us, right, the further you're off the water, the less damage you're going to incur as an underwriter. So it is a matter of, again, you cannot insure all of the homes in that area because it would be financially irresponsible, not only to your stakeholders, but to your customers, because you wouldn't be in a position to actually pay them all. So I think all insurance companies, and certainly we do, we take it very seriously on looking at how much accumulated risk we take in those areas. And I think over the years, the models have changed and increased their sophistication level that make it very difficult for some homeowners in these areas to actually find coverage. And I think that's where, when we talked earlier about North Carolina, and a lot of states now have got state-sponsored insurance programs, again, because it just is very difficult financially, right, with what's been built up on these coastlines to find the ability to really handle the kind of loss exposure that could happen through these kinds of events.